Right now, the entire global economy is basically holding its breath, waiting for a single decision from the US Supreme Court. And this isn't just some abstract legal debate. We're talking about a case that could totally redefine presidential power and, honestly, trigger a massive shockwave across all financial markets. And it all boils down to this one massive question, a $200 billion question, actually. Can a president use emergency powers to impose sweeping tariffs on, well, the entire world? The answer is going to set us on one of two very, very different economic paths. All right, so here's our game plan. First, we're going to dig into the legal showdown itself. Then, we'll walk through the two possible futures for the market. Path A, if the court gives the tariffs the green light, and Path B, if they strike them down. We'll even look at some pretty important economic history. And then finally, we'll get into what all of this really means for stocks, bonds, and your wallet. So let's get into it. What is this fight really about? Well, it all comes down to a law that's almost 50 years old, and what some are calling a very, very controversial take on presidential power. Okay, so the piece of legislation at the very heart of this whole storm is the International Emergency Economic Powers Act, or IEEPA. Now, it was originally designed for things like sanctions, giving the president the power to regulate importation during an emergency. But, and this is the absolute key detail, the word tariff is nowhere to be found in the entire law. But get this, that little omission hasn't stopped the current administration from using IEEPA to create this huge new tariff system. In fact, it's pretty staggering. A full 61% of all U.S. tariff revenue is now being collected under this one highly contested law. And this really lays out the core of the legal challenge. Just look at the other laws presidents normally use for tariffs. Section 232 for national security, Section 301 for unfair trade. They all explicitly say, yes, you can use tariffs. IEPA is the big outlier here, and that's exactly why this whole thing has landed in the lap of the Supreme Court. And look, this isn't just some dry technical debate. During the oral arguments, the justices themselves were framing this as a huge constitutional issue. As Justice Gorsuch said, the power to tax, which, let's be honest, is what a tariff is, that has always been a power held by Congress, not the White House. All right, so let's walk down the first of these two roads. What happens if the court actually sides with the administration and says, yep, these tariffs are legal? Well, this would basically kick off a brand new era where these emergency tariffs become a permanent part of our economic toolkit. Now, first things first, it's really important to know that the market is betting against this. Based on some pretty skeptical questions from the justices, prediction markets on platforms like Kalshi and Polymarket are only giving this outcome about a 1 in 3 chance. But if it happens, the fallout would be huge. So you might think, okay, status quo, no big deal. But actually, this would probably be pretty bad news for stocks. Why? Because markets absolutely hate uncertainty. A ruling like this would basically formalize a volatile global order, and it would force investors to price in a brand new permanent risk of sudden trade wars. We'd probably see the dollar stay strong, yeah, but global growth would take a serious hit. Okay, so let's pivot to Path B, the one the market thinks is more likely. Now, this is where things get really interesting. You'd get this initial sugar rush for the stock market, but it would be followed by what could be a massive fiscal hangover. Because if these tariffs get struck down, wow, the US government could be on the hook for refunding every single dollar it collected. And we're talking about a liability that could be as high as $200 billion, all owed to over 300,000 different importers. So the market reaction here is going to be tricky. It's a real two-act play. In Act 1, you'd almost certainly see a big relief rally, especially for retail and consumer stocks. Wells Fargo thinks it could boost S&P 500 earnings by over 2%. But then comes Act 2, the catch. Paying out all that money is like the government yanking a huge amount of cash right out of the financial system. The Treasury would have to issue a ton more debt to cover it, which could send bond yields spiking and put a whole new kind of pressure on the very same stock market that was just celebrating. So let's just put these two paths right next to each other to make it super clear. Path A gives you long-term uncertainty and probably weaker stocks. Path B gives you a short-term party followed by a fiscal shock, and maybe a spike in bond yields. It's two very different flavors of market volatility. It's easy to think a moment like this is totally unprecedented. But the truth is, when it comes to aggressive trade policy causing chaos in the markets, we've kind of been here before. History has some pretty stark warnings for us. I mean, just think about the infamous Smoot-Hawley tariff back in 1930. It made the Great Depression so much worse and just cratered global trade. It's a chilling parallel to that volatile global order we could see in Path A. But maybe the most on-point legal case is from 1952, Youngstown versus Sawyer. Right in the middle of the Korean War, the Supreme Court stepped in and said, nope, the president can't just seize private industry. They made it clear that when it comes to the economy, Congress, not the president, holds the ultimate power. Okay, so let's bring this all home. Why does any of this matter for your portfolio, for your money? Let's break down how this is already causing ripples across different asset classes. And the thing is, we're already seeing this play out. Take a look at the VIX, Wall Street's so-called fear gauge. It's been climbing, and you can see these sharp spikes every time there's a new tariff threat, like the recent talk about Greenland. This shows that the market is now treating trade policy like a direct geopolitical risk. And in that kind of uncertain environment, where do investors go? Well, they often run to safety, which helps explain why an asset like gold has been doing well as a hedge against this kind of potential policy mess-up. And believe me, analysts are not pulling any punches here. One report straight up warned that until this gets sorted out, the risk of what they called a thermonuclear economic shock is still high. That's the kind of environment we're all trying to navigate right now. But here's a really critical piece of the puzzle you have to understand. Even if the Supreme Court says no to these specific tariffs, this whole thing is probably not over. The administration has already signaled that it will just pivot. They'll try to use other laws like Section 232 and 301 to basically rebuild the same tariff wall on different legal ground. So a court loss doesn't end the uncertainty, it just moves the fight to a new battlefield. And so in the end, it all comes back to this massive, fundamental question. The very same one that justices are wrestling with and the one that's going to shape our economic future. In this complex, globalized world, where exactly is the line between a real national emergency that needs fast action and executive overreach that sidesteps the Constitution? The court's answer is coming soon, and believe me, the entire global market is waiting to hear it.